Welcome to this Saturday, April 13th, 2024 edition of the Fab Five. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and I'll be your host here for the next 10 or 15 minutes. I'm going to give you 15 charts today. So we had 10 last week. I'm going to go over those again, and then I'm going to give you 5 new kind of setup / educational charts, and I'll explain as I go through each of the charts. Well, let's go ahead and take a look at that first chart from last week. I just want to give you a quick update on how these stocks are performing. All right, so first we've got Spotify. So Spotify talked about last week, that big breakout. Saw those 3 candles like 3 white soldiers. Not quite 3 white soldiers, probably needed a little bit more of a hollow candle on that second candle, but still very similar to that with high volume. And I just like the way the stock's acting. Even last week with the selling, you can see really not a whole lot of red filled candles. So that means there's not a lot of selling taking place during the day. So I think this one's held up well, but I'm looking at 285, 290, something like that. I think if it pulls back into that range, that would be a very interesting level in terms of a reward to risk. The next stock that I have here is NR, New Park Resources. Mentioned that this one was had broken out of the cup. Probably could have had used a little bit more volume. It has pulled back. Friday was a weekday for it, and it did come back to the 20-day moving average, which actually, after you break out, pulling back to the 20-day is not really a bad area. We saw that like on Wednesday of last week, got down close to the 20 and then rebounded. Friday, we ended up closing almost right on that 20-day. Third chart, REVG. So this was another chart that had broken out, and I did show you these 3 white soldiers, 2 different sets of them. They're very bullish candles, especially when you get the kind of volume that we're seeing on this chart. AD line strengthening, so that means that we're seeing a lot of intraday buying for the stock, and that's obviously evident in these hollow candles. But we were overbought. So what I talked about last week was maybe getting a pullback somewhere in that 21, 22 range. Now you can see that 50-day, or excuse me, the 20-day moving average, which is currently at about 21.58. A little bit more selling. That would be interesting between 21 and about that 21.58 level. Fourth chart was Robinhood, HOOD. Just love the AD line that was going up. You can see the breakouts and the pullbacks holding gap support here. Here you can see we were holding on to the 20-day moving average. We did open a couple of days below that 20-day moving average last week and then finished back above. But Friday, we had our first close back below the 20-day. Maybe we do get down to this price support level. I think 1710 or 1720 right in that area would be that first key level of support. So I'd continue to watch that. The last one among the breakouts from last week or possible reversals was Bandwidth. And I'm literally looking at the same chart I was looking at a week ago. Big breakout, heavy volume. And then after this false breakout that we saw back in the second week of March, we have just simply, moved back sideways on lesser volume. You can see the volume's been dwindling, but we are back down near support. And I think on this one, also I talked about maybe around that 1710, or maybe it was a little bit higher here. I might have talked about that. And then also this low that came in right around that $17. This is kind of a zone that I would be looking maybe to accumulate it, even all the way down to the 50-day or even this bottom support level. But that's where I would want it to hold. So 1650 to 1750, something like that, I would think is an accumulation area. All right, then I gave 5 setups last week. First one was on Now, and I talked about Now getting up to about this top of this triangle downtrend line, the top line. Wanted to see it really break through 800. We did get close. We got up to about 795, 796 on the open on Tuesday, but then fell right back into the triangle. I didn't extend the annotation, but even the gap up, even though it broke a little bit above this triangle, you can see it didn't take out the prior high. So I'm still, and it closed within the triangle. So I'm still considering that this is a chart that is really squeezing. We have had multiple tops now up around the 795, even up into the upper 790s. And so that does open up the possibility if the triangle breaks that maybe we go back and hit this double bottom, actually triple bottom, which is down near 740. It could just be sideways consolidation that we're in here, but that would be if the triangle breaks. If it breaks to the downside, if it breaks the upside and gets through 800, I think that would be a really bullish development, especially if you see the volume start to pick up over here. We get another 1.5 million or 2 million shares, something like that, with a breakout. That would probably be the start of another uptrend. Second setup from last week was Informatica. I still really like this stock. Obviously, there was that hammer, doji, whatever you want to call it, right on the 20-day moving average, and it really continued moving higher throughout this week. So I think it closed last week 36 and change, and this week it almost hit 40. So this one did make a really big move. All hollow candles, though, and you can see now, look at the AD line really soaring because the stock, for the most part, was rallying in the afternoon, and that's what will generally result in a strengthening AD line. And so anyway, INFA still looks good. This one, 20-day test is probably where I'd be looking for entry if I wasn't in. 103, let's see, this is set up GKOS. So this is Glaukos Corp. And I was looking at maybe this cup, and we did get a breakout on Monday, but I noticed that if you look down here, check out that volume. It was probably the heaviest volume that we've seen since the end of January. And that's what you want to see with a pattern. If it executes, you want that volume to confirm that breakout. And that's what we got. So we got the confirming volume, and now we've pulled back. I think the cup, the top of the cup, which is right around where we closed on Friday, I'm going to say around 97.5 or so, and that rising 20-day moving average, which is closer to 95. Those are the two key support levels to keep an eye on. Next up, HUYA, HUYA. This is a stock that I liked because we did get this double top breakout right here. Said it kind of reminded me a little bit of a head and shoulder bottom, except this should be the low on the chart, and it's not. So I would not call this any kind of a head and shoulder, but it certainly looks like one. There's probably a lot of folks that would look at it and think it's one. So seeing the volume come in on that breakout was good. We did get that move through $4 or $4.10, whatever it was. Got up as high as 5 and change before reversing, actually got up to 5.30, and then pulled back. Last week, you can see, this is actually a weekly chart. So last week we did get that pullback. I was thinking that was the breakout last week, but that obviously was back earlier. So my bad there. But in March, we got the volume to accompany that breakout, and then reversing candle last week. So I think that $4, the rising 20-week moving average, along with these two tops, that's going to be a key area of support on the way back down. And then the last setup I gave you last week was Terex Corp. Really nice AD line. And you can see with the uptrend followed by what looks like potential cup, trying to get through. Look at the volume, though. Could not get any volume to accompany it to the upside on what looks like maybe a slight breakout. And then right back down we came. Watch that 20-day moving average, though. This is where we came down. Looks like we may have touched it on Friday. I'd like to see the stock bounce and go right back through 65. If it does, look for volume. We want volume to confirm that breakout. And if we get it, that potentially from the top of the cup to the bottom is about $12. So we could get a measurement up to about $77. All right, let me give you the 5 charts that are new this week. So the first one is Lennox International, LII. Wanted to point out a couple things. First of all, we got a nice bullish engulfing candle, and try and zero in on that so you can see it really well. But there's a bullish engulfing candle right there. Notice also that we've got some pretty good support at about 455 or so. That was the tops over here before we broke out. Went back, we tested that level, and it held before we went to another high. So this is a level you don't want to lose to the downside. So any kind of a intraday pullback on Monday, I think, sets this up from a reward to risk standpoint pretty solidly. Something back down into the mid to upper 460s maybe. That would be probably a good area to consider. But a breakdown below 455 is where I'd be out. So you got to give it maybe 2 or 3% to the downside if we can get it down to that level where we want to get it. But I would look for it to maybe reverse back up and get to that 500 area. So 460 entry or 465 entry gives us 35 to the upside. Oh, probably about 10 to the downside. So that's a 3-to-1 reward to risk ratio, maybe 3.5 to 1. Pretty good setup on LII. Now, I did want to mention negative divergence here. When I see these negative divergences like that, first thing I think is that we're probably not going to hold the 20-day moving average. We could, but I look for the odds to go all the way back down to the 50-day moving average to be greater after we've had a negative divergence, which we had here. And you can see we made our way down and we have tested the 50, and notice that the PPO is back down near the 0 line. That's what I call reset. And that's where the momentum is completely back to square one, completely level, no momentum on either side. And then we see what happens from there. But I'm going to be talking about negative divergences on Monday. We've got a free event. You do have to be a 30-day free trial member at Earnings Beats to get in. But go over to our site at earningsbeats.com. And you can sign up for a 30-day trial if you want to come in and learn more about divergences. That's all this event is going to be about. It's part of our series. Probably, I can go over here and bring up just to show you real quick. So here is the no-cost trial. So you go over to earningsbeats.com, and that way you'll be able to get into the event. Here are the 4 events. So each Monday in April, at least the first 4 Mondays in April, we're having events. We are already done candlesticks. We've done price volume, but you can look at those recordings. And then divergences and trading gaps are coming up, and you do need to be at least a 30-day trial member, free trial member at Earnings Beats to check that out. But you can then click on that and go back and learn a little bit more about what I'm going to be talking about. So getting back to the charts, you can see LII. I think this area is a little bit of a pullback maybe on Monday. Might be interesting for a possible trade. The next chart, AutoNation. One of the things I did here is I pulled up price by volume. It's an overlay that if you're familiar with stock charts, if you go under overlays, you can pull up volume by price. So it's going to be down near the bottom, volume by price. And what this does is for the period that you show, it basically tells you what ranges all the volume. It looks at closes. And so if you closed in this range, it gives you the green volume and it gives you the red volume. So if it was an up day, then it's green. If it was a down day, then it's red. But you can see this area of support on AutoNation that I'm about to show you in terms of price also is in a price range where we have seen a lot of volume. So this tells me that it was a big resistance level to get through. And now that we got through it, what I'm hoping and what I'm counting on from a reward to risk standpoint is that this would be a solid support level on the way back down. Notice we just tested the 50-day moving average. Nice reversing doji. On Friday, we actually did put in a higher high and higher low. So this could just be starting a pretty nice uptrend after coming back down, testing this area of support. Best entry would be probably, right where we are, down to maybe 152.5. I think if you close below 150, I'd be really careful. So you can keep a really close stop on this one, maybe 2% or so. And to the upside, if you're in around 153 or something like that, you got another $14, almost 10% to the upside, maybe nine and change. And so versus maybe 2% to the downside, we're talking again about 4.5 times, maybe even close to 5 reward to risk, 5 times gain versus loss. That's the kind of reward to risk setups that you want to generally try to get yourself into, which is why pullbacks are so important to me. Because if we get back close to key support levels where I'm looking for a reversal, I can get out quick if I'm wrong. The problem when you chase stocks like this is that where do you get out? I mean, is it the 20-day? Here you get the 20-day, you would have been stopped out. Then it comes right back up above. Get back in? I don't know. Then you get back down to the 50 and you're down again. I'd rather just get down to that key support level where I want to get in and then be able to keep my stop pretty tight. The next chart. So this is YELP. And this is one that I just looked at it And I thought a couple things pretty interesting on this chart. Number one, you can see that this is definitely a key support level right at about 40. So when we broke through with a big gap down and heavy volume, and look at the selling these 5 days, and you can check out the volume. I mean, this was a big move down. Now we have moved up just a little bit above this price resistance area and a little bit above the high that day when we gapped down. But look at these tails. You see these on a candlestick, these long skinny sticks. They're called, I call them tails, and people call them wicks or shadows. But for me, I just call them tails. When I see those long intraday tails, but then closing way off of those highs, that's the opposite of strong accumulation. That's poor accumulation. And you can see down here the weak AD line. So even though we're going up in price, the AD line's telling me this isn't nearly as impressive as you might think. The selling that we saw over in here, much heavier than the buying on the way back up. I would just be careful, and especially if it comes back down and loses this trend line and also the two moving averages. So just a little, piece of experience, I guess, having done a lot of trading for a lot of years. This one, normally you get above moving averages and you start thinking, oh, I want to go long. I'm actually a little skeptical of that. We'll see what happens next week, but I wouldn't be surprised to see this one roll over and head lower. Next up, DFIN. Now, this one had been downtrending. I didn't draw a support line, but I can, because I think that's kind of important too. We've been bouncing off of this support area ever since we broke out the beginning of December. So we moved up, pulled back, tested, moved up, pulled back, went below it, but held, came back up. And then we were in this channel for 6 weeks, and we went back down and we tested it again. And then on Friday, we closed above the channel. So, and the volume picked back up again. Now, this volume normally averages probably around 200,000. But you can see there are several days, many days below 200. I normally like to see a little bit more volume in the stocks I trade, but I did want to mention it. I think it is a nice setup and nice breakout of that channel. All right, next and last is another kind of educational chart. Now, this one is where we see positive divergences. And I want you to check this out. Lower prices, higher PPO, and we work our way back up to the 50-day, and we get that PPO center line test. Just recently, another positive divergence, lower lows, higher PPO, and what happens? We get strength, and we get all the way back up to that center line on the PPO. And look at that. We get a reversing candle. Looks like bearish engulfing. I don't know. Maybe it's not quite a bearish engulfing, but it looks pretty similar. But anyway, it occurs right at the 50-day, and the failed 3 times. We've been, ever since we went below $8, 3 times tried to get through 8. Couldn't do it. We finally get through. Do we get any follow through? No, we get the exact opposite. End up pulling back, probably market makers getting probably distributing shares, maybe getting a smaller institution out or whatever. But anyway, after this center line, we don't know if it's going to keep going up or come back down. So once we get that center line test, we have to wait to see, do we get the breakout or do we get a breakdown? Friday was our answer. We got a breakdown. I think this stock goes lower now that it's had this reset on the PPO and we've got the reversal off the 50. I think we could see some accelerated selling to the downside. So HTZ, again, I wanted to just talk a little bit about divergences because, again, if this kind of stuff interests you, you want to be in our Monday night session. Love to have you. In the meantime, if you like our videos, our Fab 5, or any of our videos, make sure you hit that like button. We certainly would appreciate it. And while you're at it, subscribe to the channel. Anytime we do any of our shows, if you subscribe to the channel, make sure your notifications are on. Then you'll be notified anytime our videos come out. So anyway, have a great rest of your weekend, and maybe keep an eye on these stocks. Have a great weekend. We'll see you on Monday or Tuesday with my next Trading Places Live, and of course Monday afternoon at 4:30 p.m. if you want to attend the Divergences event. Have a great day, everybody. Happy trading.